let's talk about financial statements. Actually, there are 3 statements in a set of financial statements. There's an income statement, a balance sheet, and a cash flow statement. So they are not tax returns. They are prepared much more frequently, quarterly at least, monthly if you can, certainly annually. And they're probably the best way to understand how your business is performing, which is why investors and lenders will typically ask for them. So let's talk about them. An income statement is often called a profit and loss or P&L statement as well. And what it shows is the revenue or sales related to the business over a period of time. So it could be a quarterly income statement or a monthly or an annual income statement. And it will show the expenses and the net income and all of the expense and revenue activities in between on that statement. It'll often be used to compare the business's performance in a trend or versus a prior year or a different period. So it's the best way to understand how the business is improving and growing and performing. And that's an income statement. A balance sheet, okay, is different than an income statement in that it's not over time, it's at a point in time. So when you give someone an income statement, you normally will give them a balance sheet with the same date ending as the income statement. So a balance sheet has assets, liabilities, and equity on it, right? And all of those 3 pieces of your business are important, again, in understanding how the business is growing and performing. So interesting thing about a balance sheet is it always balances, right? So what that means is your assets will always equal the sum of your liabilities and your equity, all right? And your accounting system will manage those balances based on the activity throughout the periods. For example, if you buy a computer, your cash balance will go down and your equipment balance will go up. And if you borrow money, your cash balance goes up and your loans or liabilities payable to someone else also goes up. That's a balance sheet. All right, the third statement is called a cash flow statement, and it basically shows the sources and uses of cash in your business and how cash moves throughout your business based on the activities in the period. Now, it also ties together the balance sheet and the income statement very tightly. So when you look at a cash flow statement, you'll have 3 sections. You'll have one that says cash from operations, and that will show all of the ins and outs of your operating cash flows, your revenues, changes in your balance sheets for the balances that are related to operations, your expenses, all of the day-to-day activity will show up in the operating cash flow section. The second section is called an investing section. So your cash flows from investing will be if, for example, if you buy equipment, something large, you're investing in the business, that's where cash flows of that nature will show up. The third section is from financing. Cash flows from financing is if you're borrowing money or you're raising equity or paying back loans, that sort of activity, how you fund the business, that's what shows up in the financing section. The sum of all of those sections is called your total change in cash flows, right? And so your cash flow statement will show a beginning, a change in total cash, and an ending cash balance for the same period that you're showing the balance sheet and probably the ending period for the income statement. So they're all tied together. So if you were to give me 2 of those statements, I could actually solve for the third one. Interesting. Well, at least for finance, that's interesting. So anyways, those are your statements. So if you don't have them, please go get them. Or have your CPA or your staff help you generate them and review them on a regular basis. So for more tips and training just like this, please visit our website. I hope this was helpful. Our website is financepinnacle.com, where we help you understand the finances of your business just a little better. Thanks. See you later.